It's Aaron Morrow again, Brian LaFlame. We got our fancy titles underneath here, so you can know who's the lender, who's the realtor. We're both Washingtonians this time. Everyone's confused who has not been tuning into any of these past lives or anything like that. But glad to have you back. If anyone has been watching any of our previous lives, glad we have you on all of streaming to all the platforms, the YouTubes, the LinkedIns, the Facebooks, the Clappers, the Instagrams, the TikToks, all of it. We're here. And today we're going to talk about something that we mentioned on our last live stream. We're going to talk about down payment assistance programs here in Washington State for first-time home buyers that might be looking for a little bit of that down payment assistance help.
So hold on, I'm going to correct you right there. Hardly any of these down payment assistance programs require you to be a first-time home buyer. A lot of people stop and say, well, I can't buy a house because I'm not a first-time home buyer and I don't have a down payment. We got you.
Yes, yeah. I should say that the majority of my clients that I've worked with that have taken advantage of DPA were first-time homebuyers. However, Brian is correct. You don't technically have to be a first-time homebuyer to take advantage of most of these first-time homebuyer programs. It's actually a common
live in the house.
I would even say the FHA loan, that's a common misconception too. Not even DPA, but a lot of people don't know that loan, you just have to have been in the home for 3 years and then you can reuse that loan, if I'm correct.
No,
right?
You can get an FHA loan if you're not a first-time home buyer, and it is geared more towards first-time home buyers historically because of the lower down payment options. Somebody doesn't have a home to sell or put down on another home. But rules around FHA is you can have one at a time unless you are moving. It's 100 miles away from where you currently are. So say you own a home in Washington and you're going to move, your job's relocating you to California. You can have 2 FHA loans. Now, say you own a home in, North Slope of Tacoma and you want to move down to the Proctor District, and that's too close. Or if you want to move over to Puyallup, that's too close. You got to get a conventional loan. An FHA loan you can also convert to an investment loan. So say you buy a house with an FHA loan, 3.5% down, you decide, hey, I'm going to make this my first rental. I've lived here a few years. I've got some equity. I'm going to take that equity. I'm going to buy a move-up house because my life has changed. Well, you don't have to refinance that FHA loan out of the FHA loan in order to rent that house out. You can do it right then and there.
That's fantastic. Yeah. Mm-hmm. And that's something that, I wasn't even aware of all of that. You know what I mean?
And you do business all day, every day. These jobs are, your job and my job, both complicated and very nuanced.
Well, and then there's a lot of overlap, but for how much there is overlap, there's a vast majority of not overlap. It's kind of like if you look at like the picture of an iceberg, right? And how much is on the surface compared to how much goes beneath. And I would not want to switch roles. I love what I do, and I'm sure you love what you do, and I would not want to trade places.
I've done both. I started as a realtor, then I did both real estate and lending, and this is the one that's for me. I'll tell clients a lot, even if I know a real estate question, I'm not going to answer it because then it gives them some tacit permission to ask me more complicated questions that I will not know.
Right.
Like you're the expert in spend all of your day eating, drinking, going to night and sleeping real estate. Why in the world would I want to give somebody, JV advice when I've got varsity right here? Like they're already talking about varsity.
Exactly. Right. Yeah. Yeah. And completely and vice versa. That's why when I will answer basic loan questions that I am 110% aware of, and I've confirmed, but there's a lot of times I'm even like, you know what, we got to check with Brian, or like, we're going to confirm with him, or even just go to him. But then there's often times where I'm even like, hey, why don't I take care of the communication for you, where I will do a 3-way email for you, just to take care of that burden where you don't have to.
Let's get everybody in this huddle.
Make it easy peasy so we're all on the same team and we're not having to play a game of telephone. You know what I mean?
Yeah. And Aaron said that he will give mortgage advice if he is a certain percentage sure, and he already got it wrong because 110% is not even a number. It's not even a number.
Yeah. The math wasn't mathing on that one, right? Yeah. Oh, man.
So what are we talking?
That's good. Well, again, yeah, I think we should primarily go over different down payment assistance programs that. I mean, there's a couple of different like national ones, but like primarily we should focus on what on the state level since we're here
Yeah,
in
yeah.
Washington
Mm-hmm.
State. Yeah, for sure. I also sidebar like if we have enough time, I think it would also be cool to maybe talk about USDA just because I know that's not down payment assistance, but it's also a very it's a nice loan that not that many people are aware of. We even have current clients that are looking into it right now that you and I are working
Mm-hmm.
with. So it's on
Mm-hmm.
topic and it's a zero down payment loan that you don't have to have been in active or prior military like the VA loan to have access to it. You know what I mean? Hey, Brian's kid. um, so yeah, I don't know. I think we should go over all of that. You know,
I think it's a great idea. Yeah. So
yeah,
let's start with some Washington down payment assistance products.
yeah, for sure.
The Washington State has a housing finance commission, and the Washington State Housing Finance Commission, especially in the past decade, has really opened up who qualifies for down payment assistance. This down payment, they've done it a few ways. They've done it because in ways where before they would only have capital raises, and then once
Right.
that money was gone, then the down payment assistance was gone. And there still are a couple of those programs, but the vast majority of programs used actually have an entire like mortgage servicing standard where we have investors to whom these loans get sold, just like a non-down payment assistance loan, which means the money is available into perpetuity. With that, they've increased income limits for down payment assistance. Down payment assistance, when I first started this, had income limits as low as 70 grand. Now that's good money, but if you make $80,000, you were out in the cold. And they've since, and then it would be partitioned off by areas of the state. So if
Right.
you lived in Walla Walla, or if you lived in Spokane, or if you lived in Olalla, or if you lived in Tacoma, or you live in Seattle, they're all different down payment assistance income levels. Now, some programs still have a portion of that, but it's definitely not as pronounced as it was before. The most important or the most popular down payment assistance program through the Washington State Housing Finance Commission is a program they call Home Advantage. The Home Advantage loan can be used with a VA loan, an FHA loan, or a conventional loan or a USDA loan. The most popular ways that we use them are with FHA loans. And the way that it works is if you make at least if you make $180,000 a year or lower, you might qualify for this program. If you have a credit score of 620 or higher, you might qualify for this program. If you are going to own or occupy this house, you could qualify for this program. So their big kind of overarching rules are qualifying income of $180,000. I'm going to stop here for just a second so you guys can rewind and replay this if you need to. Qualifying income is just the income we use to qualify you for the mortgage. Some loan programs have a household income requirement like the USDA does. Whether or not you're on the loan, if you're 18 or above and you have an income, they have to count that against the income limit. Home Advantage is just what is the lender uses to qualify you. So if you make $150,000 a year and your spouse makes $75,000 a year, you think, oh man, we're at 225. We live in Redmond. We'd love to buy a house, but we can't save up the down payment for the amount for the price of homes here.
Right.
You don't have to worry about that because we would just then use the one spouse, and then if you qualified every other way for the loan, we could just use the one income.
Right.
So it is a standard 30-year fixed FHA loan. Interest rates are a little bit above market, and it's because the investor pool is smaller, but there is an investor pool. So before, when it was just a capital raise, and then they would use that money until it was gone and then raise money again, those interest rates would be set for the next 6 months or 8 months or 3 months or however long it took to get rid of that money. So the money would be what the interest rate would be what the interest rate is until that money is gone. And it could be way above or way below market. With the Home Advantage program, it floats a little bit above market, but kind of moves with the maturations of the normal mortgage-backed security market that we've talked about in shows past.
Okay.
So you get a standard 30-year fixed mortgage. And then for your down payment, you get a percentage of your loan amount in down payment assistance at 0% interest and no payments until you sell the house, refinance the house, pay it off in 30 years, or move out. 98.99999% of clients that we have done this for have gotten an FHA first mortgage. down payment assistance, second mortgage. And then as their equity position rose, they refinance from the FHA loan into a conventional loan to maybe get a lower interest rate and definitely get their mortgage insurance off. That down payment assistance loan is then just paid off the way the first mortgage is. You're not writing a huge check to pay this off. If you take 30 years to pay the house off, yeah, absolutely, you're going to write a check at the end. But let's put that in perspective. 30 years ago, the median house price in Washington was $126,500. So you were writing a check for about $4,500 or so, depending on how much down payment assistance you took, which nobody wants to write a $4,500 check. But if it's to pay your house totally off, that hurts a lot less than what you're thinking of the down payment assistance you might be looking at now, $18,000 and $22,000. That money
Correct.
will not be as egregious in 30 years.
Yeah, and if you end up like most people either refinancing out of it or selling the house, it's going to come from the proceeds. So for instance, like take my scenario, for example, had I used when I bought my house in 2014, I bought my house in Covington, Washington for $282,000. Now it's currently fair market value is actually $640,000. Now, if I had bought it on down payment assistance and refinanced it let's say I didn't even refinance till now. I mean, I'd have so much equity built up that would just I wouldn't even notice paying off that
And you don't.
DPA
No
program
client has.
with that refinance. Yeah.
One of my favorite stories is there's a real estate agent with whom we work who moved to Washington and got into the business when he moved here to Washington. He was in my down payment assistance class. He bought his house for the cost of his earnest money. The seller paid his the cost of his inspection. So he paid a $500 inspection. The seller paid his closing costs, so he got his earnest money and his appraisal deposit back. And Aaron and I will do a show on what all those are in the future as well, kind of the costs of buying. He got a 30-year fixed mortgage. He has since refinanced it down to a 15-year, paid off that down payment assistance loan, and his mortgage payment is lower than his 30-year fixed rate was when we
That's amazing.
bought the house.
That's
hundreds
fantastic.
of thousands of dollars in equity. And he came here starting, a new career and a new life. And it would have been just like your instance if you had bought it with DPA. You would have refinanced to a lower rate, and you wouldn't even have noticed the down payment assistance loan.
Yeah, that's fantastic. That's awesome. I would have to say that I'm trying to remember what my thoughts were on this because I had something to say regarding it. I think because I have a couple of clients that we're working with. One that we just pre-approved the other day that we were on a Zoom meeting together with. And they were looking at the FHA. I think they were looking at DPA too. Were they looking at DPA with multifamily?
Yeah. The Housing Finance Commission and as well as our local program at Root Mortgage will allow duplexes to have DPA now, which is crazy.
That's nuts, guys. Okay, I'm looking at
cool.
multi-screens, even though like I should just be looking at my camera. I've got 3 monitors active right now. This is huge, guys. Being able to, this is called house hacking. So like, if you're in a position, and I've had a lot of first-time investors or a lot of clients take advantage of this, where they go in and they buy a duplex, where they buy it on a loan that has very low down payment or a down payment assistance program that covers the cost of the entire down payment up front.
Hold on, I want to stop you. This is it, you guys. If you're listening to this podcast, if you're listening to a live stream, stop what you're doing and pay attention to this. This right here, what Aaron is going to talk to you about could absolutely change your life. I'm not being facetious. I'm not exaggerating, which is being facetious. This could change your life. Go ahead.
And nationwide too, if you're not just in Washington, because this could even help easier. Like you can have an easier time not in our state just because we are pricier here, but you might have more affordable multifamily if you're in other more affordable parts of the state or parts of the U.S., right? So with this said, with house hacking. So essentially you go in there and and it starts minimum with 2 units. So like a duplex, right? So you go in there and you work the numbers to make sense for you, where at worst case scenario, Worst case scenario, you have a situation where you're living in one unit, you have a very low down payment or a down payment assistance program covering all of your down payment and some, if not all of your upfront costs if you have negotiated right with the seller. Like, I'm talking about maybe not upfront, like during the process, and we can get into this, but all said and done at closing, you might get all of your money back. Where you're in a situation where you got into that house for zero upfront. And now you're in a situation where you can put a renter in the next unit and they're paying at, like, worst case scenario, half of your mortgage. Like, that's like the worst case scenario. Like, you're not doing it right if you're worse than that's your worst case
Being
scenario.
too
Like,
nice,
don't
yeah.
do it. It's a terrible deal if you can't at least get it to where it's paying half your mortgage. You know, like, don't buy it.
This,
You know,
yeah, this is
Yeah.
such a this house hacking is
Yeah.
such an incredible opportunity. It is
Right.
what I am requiring my children to do by age 20.
Yeah.
I'll give you the down payment. I'll co-sign the loan. You are buying a duplex. You are renting it out the other side, and you are never selling it. You're moving on to the next and the next and the next. Like, that's how much I believe in this. Is my children as they become and they ask me about it all the time. Like, I'm starting the conversation now with them about it, and it's not too late if you're 35, 40, 45, 50, 65 and have been renting and this is an incredible way to get
It's a
into,
really smart first buy.
Mhm.
It's a really smart first buy. Now, not everyone's situation's the same. Like, I would say, I would have done this too had I, I think it's
Mhm.
different when, because there's a lot of married couples that don't want to do this, because they don't like the idea of living in one duplex. But there are a lot of married couples I work with that are like, no, we're doing this. Like, this is
That
what
like
we're
each
doing.
other.
This is smart. Yeah, yeah. So, and I think it's awesome, and then you can just go up from there because more doors bring more opportunity. Because then you can house hack a triplex, you can house hack
Mhm.
a fourplex. Because anything under 4 doors, folks, counts as single family. So
Residential, yeah,
you're not doing commercial loans. So we're not
yeah.
tied to crazy high down payment loans that you have to do with commercial.
I have a buddy whom I went to high school with that I've done some loans for, and his entire he's quit his job as a construction guy, and he was doing some flips. But when he really started to make money was when he stripped his equity out of his duplex to buy a triplex, his triplex to buy a fourplex, and then his fourplex to buy another fourplex, and then he bought apartment buildings. He did it
Yeah.
all with the renters paying this mortgage, leveraging the equity of this asset to buy a larger asset to have someone else pay for it again. It is unique to real estate. And to tie it back into what we're talking about, you can start this with a zero down home loan that you live in, either a single family 1 unit or a duplex that you live in. You're not going to get rich tomorrow, but you're going to start the path of generating that wealth, and you don't have to wait to save 20% down.
I think it's great. And I think what we're going to do, because we did title this about DPA, and this is good.
Mm-hmm.
People that are coming to learn about down payment assistance, this is great. This was our target audience for the live stream today, but we're also going to talk about on a different episode on our podcast and our live stream, we will talk about house hacking, because I want that to be its own subject matter, and I want it to be because that is a whole there's going to be a whole different audience, folks out there that are going to want to come just for that. So
if you're here for
we'll
down payment
definitely talk more
assistance,
about that.
know that you also can do that.
But yes, that's what we're saying. The biggest takeaway and the
Mm-hmm.
biggest surprising thing to know is you can house hack a duplex and have down payment assistance do it. And if you have the right realtor and the right set of circumstances, you can go into the situation where you paid like nothing up front for it. So let's talk about that. Let me give you an example. Now, I can't give you this example on a house hack scenario, but I did have a most recent example, and you could apply this to a house hack if the circumstance worked the same way. But essentially, one of my most recent DPA program clients that bought single family, and it would work with duplex as well, because it would be it's negotiation between you and the seller. But basically what would happen is you as the as the buyer. You have the down payment assistance, which, Brian, with the FHA DPA, is it up to 5% or what is it for?
It is up to
Right,
5% of a client's loan amount.
loan
So
amount. Yeah,
there are three
right,
different options and two options within one. So you can have a 3% down payment assistance, which covers a lot of your down payment, not all of it though, and that's the lowest interest rate. You can have 4% down payment assistance with a 1% fee from the Housing Finance Commission, so a closing cost, and that'll cover all of your down payment and a little bit of your closing costs. That's the second lowest rate. You can
right,
have a 4% down payment assistance with no closing cost fee from the Housing Finance Commission. So no lender will 1% fees. You'll still have other closing costs, but it's a large portion that you don't have. And that's
right,
the third highest, second lowest, or third lowest,
right.
second highest rate. Or you can have 5% with the highest rate and no fee. If, say, the seller just can't or won't pay all of your closing costs and you would rather keep money in the bank and you're like, yeah, I can afford a little bit higher payment for now, you would take the 5% down payment assistance. Your closing costs would be super low. It would cover your down payment and a lion's share of your closing costs.
Okay. Okay. Yeah, that makes total sense. So with that, so with this scenario, with my DPA buyer, I think what they did in that situation, they were 3.5 down for FHA, and they were only trying to initially get 0.5% on the down payment.
Yeah.
But in that scenario, we were going after properties that were sitting on the market for a while. So what we were able to do was find a property that sat long enough that we just walked into the property where the property was perfect for my buyer, and we negotiated the seller to pay all of the buyer's closing costs. So then we didn't have to ask for any of the closing costs on the down payment assistance program side. So then they were only claiming the 3.5 from the DPA program, the down payment. So what ended up happening in this scenario is client only initially had to upfront set aside money for earnest money deposit, and that was set aside in the escrow account for the 30 days for the property to close. And the client paid for their home inspection, which was about like $500. And then at closing, they got their earnest money back. I think the property was like 550,000. So they wrote the earnest money was 1%, which is pretty standard for this area. So they got like the $5,500 back at closing. This is the situation, guys. They bought this home for $500 up front when they close. They paid $500 for that inspection. Nothing else was due upon closing.
They leveraged a $500,000 asset that they get to use
Yes.
for $500.
Yep.
If historical appreciation shows that where did they buy this house?
This was in Pierce County, Puyallup.
Okay.
Yeah.
Historical appreciation in Pierce County is 5.09%. It was how much? 550 was the price of the house?
Yeah.
So that means that their house went up, historically would go up $27,500 in the first year for $500. There's nowhere else to get that return.
Isn't that nuts,
and you're
folks?
already living in it too. You're using it.
Yes. Now, here's the thing. Here's some caveats that we need to explain is this buyer does need to be in a position to come up with the earnest money. That is the one thing that some buyers that need DPA or down payment assistance programs do struggle with that is sometimes the biggest barrier to entry I find with clients that come to us that need down payment assistance or need help, where they're like, hey, how do I get in a home with next to nothing? Well, there's not really a workaround to it,
And I also want to stop and make a point of this can sound very 2080. Oh my gosh, you can get in a house for no money down. We qualify you for this loan. There are credit score requirements. There are debt to income ratio requirements.
Yes.
You are able to afford this house the same way you're able to afford a normal 30-year fixed mortgage. It's an FHA loan, so it's very conservative. All we're doing is saying, hey, it's really hard to save up this amount of money, and being able to have this amount of money doesn't necessarily speak to your credit worthiness.
Right.
Like it's difficult to save up $50, $100, $150,000, whatever somebody needs. And while you're doing that, the housing market is outpacing you because say 5.09% average appreciation, historical appreciation in Pierce County, that $500,000 house becomes $525,000 the next year. So
Right.
now you have to have saved up 20% of 500 plus another 20% of the 25,000 that continues to, it's 551 the
Exactly.
next year. It continues. So we're not saying that, hey, everybody gets a house. We're saying
No.
that don't let lack of a down payment stop you from seeing if owning a home is right for you. There are tons of advantages.
Exactly. Exactly. And I think that's the largest takeaway is you're still these down payment assistance programs are rewarding people that have put themselves in a financial situation where their credit worthiness, they can get pre-approved for the home, but they just need the help up front for some of the upfront costs. But they've been approved to be able to take on the burden of the monthly payments. They've been approved for it. They can. You guys have checked them. It's like Brian's like, oh, they're good. Don't worry. We've sent them through underwriting. There's
Mm-hmm.
a person in the back. They're cleared. Which actually brings me to a point. I wanted to show you this, Brian. I'm pretty sure it's probably. Would you say the experience that a client goes through to get pre-approved through your process is a lot like this?
Proof, timeline, screenshot, everything.
Whoa. Okay. I lost Brian, folks. I do not know where he went. I will keep talking till he comes back. Oh, here he is. I'm going to add him to the stage once he comes back on. Until he does, though, I'm waiting for him. Let's see here. There we go. Hey!
Dude, I'm so sorry. Of course, that's when the internet went down. I didn't see anything. So, you know what? We're gonna cut everyone back to one and action.
Everyone's like, what's this joke? It didn't even land. Okay, you ready? So, my question was the process of people going through the pre-approval process with you a lot like this?
Proof, timeline, screenshot, everything.
I want that so bad.
Yeah.
Yeah, look. Yes. Let's talk about this too. Since we're talking about zero down home loans, we're going to talk a little bit about the mortgage process. Right now, people think that we talked about this in a few weeks ago, how this market is not similar to 2008. I want to show you guys a slide of what I mean because I'm me, so I have data for it, and that's what I love. But I got to find it first. And then we're going to talk about the ability to qualify for a home loan right now. There is no in lending. In 2008, there was only yeses. In 2024, there is a, hey, not quite yet. Here's what we have to do to get qualified.
Exactly.
You don't know what it takes to get qualified until you try to get qualified.
Right.
And so we're asking you to do something that we haven't even prepared you to do, which if you're watching this podcast, if you're listening on a live stream, you have the sort of interest and are finding the right places to learn about what this is. But I want to show you, of course, now I can't find it because I'm on the spot and I'm looking for it. Okay, here it is.
It's okay. What? Oh, you found it? Okay.
Yeah, I found it. Now I got to present. This is going to blow your guys' minds. I'm sure of it.
I can't wait for my mind to be blown.
Y'all ready for this? Bum, 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 bum. All right, so what we're looking at here,
you have the ability to put it up, right? I don't have to? Right?
Nope, you got to. I can share it and you got to put
it I have to. Okay. We're
stage.
Still learning the kinks of our streaming platform that Brian and I are doing. So, okay, perfect.
All right, so as we look at the use of adjustable rate mortgages and what makes housing markets more or less vulnerable to rates rising or going down, look at where the United States is in comparison to the rest of the world. We have the most conservative underwriting standards in the world, which is
look how far out Canada is.
I know, right? Well,
Our
Canada has
to the north.
Yeah, Canada has much different lending standards, which you and I have talked about a bit. And that is And that's they work a lot like our commercial loan business, which can be another show. But we have super conservative lending standards. So if we're talking today about zero down home loans and saying, hey, you can house hack and you can get in a house for $500 earnest money, this is not the 2006, 2007, 2008 version of that. You have to be able to verify your income. We're going to verify your credit. We're going to run you through the ringer and give you a conservative 30-year fixed rate mortgage because we want you to be able to afford this house and not be one of the people in 2005, 2006 that were the amount of people who were foreclosing or declaring bankruptcy increasing dramatically before the fall. We wanted you to stay down here where the amount of bankruptcies and foreclosures are negligible, and people are in the most conservative sort of mortgage they can have. Also, another point to make, we can stop sharing now.
Cool.
Another point to make is we are in, not only are we in the most conservative housing market, like a mortgage market available. I forget the point I was going to make because now my virtual background is gone. You guys have seen my construction zone. So my house is currently under construction. So I'm working in a corner of it. That's, but at any rate, you have to qualify for these mortgages, and we're going to qualify you so that we are positive that you're able to pay back this mortgage in a way that is comfortable for you.
Yeah, exactly. And I think the whole point, again, and we've hit this home on every single live stream that we've done, but it's never too early to talk to a mortgage lender to get a baseline of where you need to be, because you'll never know if you don't talk to us. And we are the type of folks that want to get you on a game plan on the long term. So if you have no idea when you'll ever be able to buy a home, if you never look into it, you're just going to be in the same spot next year. Like, reach out to us so we can at least establish what that will look like for you and how soon we can get you into the timeline. And we can, if the answer is you can't get pre-approved yet, we can give you the clear actionable steps you need to take to get you to where you need to be. You know, we give you the entire package to make an informed decision on if now's a good time or not. Because some clients, we can even get them pre-approved, but we might find out that the pre-approval amount is not indicative of it's not realistic to what the market has for pricing. And that's fine, but at least we found that out through, I wouldn't be able to find that out without getting the pre-approval done through Brian. Like, I'd have no idea. When clients are like, oh, I think I'm just generally looking at houses that are between 400,000 to $1 million. Like, you know, like there's no, or when people are like, my budget's 500,000, it's like, well, how did you come up with that? Where'd you get that number?
There's a few things that happen when people don't get pre-approved because really it's just a fact-finding mission, pre-approval. We're just doing math and see what you're comfortable with. What we find happens when people are not pre-approved and they go out and look at homes is option one is they're looking way above their actual budget. So when they do get pre-approved, they're like, man, either I can't spend that much money or I don't want to spend that much money because this is what it correlates to for a monthly payment. And so then every other house they look at, they're heartbroken about because they're comparing it to a dream house. Or before they get pre-approved, they're looking well below their price range. And then they kind of get fatigued because they think, well, nothing out here really suits my needs. When if they would have gotten pre-approved, they would be like, actually, I'm comfortable $200,000 above this price point. Why am I looking at a house that's not going to suit my needs when I can find one that does suit my needs that's affordable? Those two things happen when people are approved. The worst case scenario is they find a house, they fall in love with it, and they realize they're not mortgage ready yet. And it's going to take them, a month, 6 months, a year to get mortgage ready. And they fall in love with that house. We're only setting ourselves up for failure when that happens. Yeah,
I completely agree. So I think really it's always a good idea to establish the baseline. And if you're just worried about what do you do if you get a no, well, I mean, there's a little bit of effort involved to turn in paperwork and stuff, but if you're motivated to buy a home, we're motivated to help you get there, and figure out what the steps are. And we're going to be the team that checks in with you and follows up to make sure that happens. I can't tell you how many clients that I've had. I've been doing this for 10 years. I even have I should throw it up on the. It's not one of my video testimonies. By the way, I'm going to throw this shameless plug. Here's my you guys could go to my YouTube channel, and it's actually linked in the comments below this. This is the 21 video testimonials in here that you can go check out. These are real stories from real clients, either buyers or home sellers, or a lot of the sellers though are home sellers and buyers. So this is like going to be really like, because most sellers also are looking to buy. So listen to their stories. Here, all of them have been through, are going to be going through similar situations that you are, have dealt with similar different markets that we've gone through in the last 10-year cycles that I've been working with these clients. And what I was going to mention is I have a written testimonial from Zillow that I'll share with you guys. But this story from this client is I met them off of Facebook. I meet a lot of my clients off of social media, LinkedIn, Facebook, Instagram, whatever, Clapper. We got them connected to a lender. They weren't ready yet, and I kept in touch with them. It took 4 years before they were ready to be able to purchase a house, and we kept checking in every 90 days to 6 months, and we just kept that process going, and they were just shocked that we never lost touch, and we made it happen, and we got them in a home.
People have felt commoditized by our industries, real estate and lending. Oh, if I can't buy a house now, I don't want to waste their time. Or they only care about a deal. They only care about a commission. And the reality is the best of us are in this because we absolutely love helping people. And we love helping people in this way. And when somebody is so like they're just astounded that, Aaron, oh my gosh, you've been staying in touch with us for 4 years. I can't believe that. And to you, you're just like, of course I have. Like, I want to be of assistance to you. I want to be an asset to you. I want to help you become whatever version of you want to be. Of course I'm in touch, but that is unfortunately our two industries have earned the reputation for that to be surprising. And to us,
it's because a lot of realtors and lenders go after the now business. They're chasing the who's ready now, and really that's not where the majority. I mean, statistics show not everyone. The vast majority of people aren't going to buy or sell this year.
How many of you guys watching here on whatever platform you're watching on are like, today I had the thought I'm going to buy a house, and so today I buy a house? It doesn't happen that way.
No,
it just
it's
doesn't.
It's a long term. So we meet you where you are. You're either renting right now or you are a homeowner, and you are not going to either buy or sell for probably, statistically, you're going to probably do it within the next 7 years is when you're going to do it. I'm meeting you somewhere in your journey within your next 7-year time frame. You might do it in the next 6 months. You might be doing it in the next year. You might be doing it in the next 4 years, 2 years, 3 years, whatever. It might be 7 years out, but you're probably doing it within the next 7 years statistically on the national average. So I'm here to meet you wherever you're at in your journey. Brian is too. And that's where this is at. So again, DPA programs, down payment assistance programs, they exist, but USDA programs to close out, that's a little bit different because the USDA home loan, unlike a down payment assistance program, is I should not over talk about the USDA home loan because I am not a lender. I will let Brian. I'm just going to say it's an awesome loan, and I'm going to let Brian talk about it for a minute.
All right, we're going to put this in a nutshell. A USDA loan is a zero down loan without down payment assistance. It's 100% financing, similar to a VA loan. It is both income restricted, which means you, depending on where you're buying and how big your household is, you can't make over a certain amount. There are a lot of caveats to how we can bring that number down for you, but we're not going to go into all of those. We'll go in specifically if you want a USDA loan. And it is geographically restricted. You have to buy in a USDA geographically accepted area. And I'm going to have Aaron, I'm going to send to Aaron so he can put in the comments or in the show notes or wherever he wants to put it, how you can look up for yourself whether or not a home that you're interested in qualifies geographically for a USDA loan, and how you can find out for yourself if you qualify, if your income level qualifies. If you make too much money, doesn't matter if it's in a USDA approved area. You make too much money, you're going to have to look at a different sort of loan. But if you fit within their income requirements and you fit within the geographic requirements of the house that you want, awesome, let's look into it. There are a million other caveats to what a USDA loan is and who it qualifies and what doesn't qualify. You don't have to worry about that on a podcast. Just know that it is available, that you can get 100% financing. It is normally below market rates when compared to FHA and conventional loans. The rates are really good because it's insured by the USDA. By the Department of Agriculture, excuse me. So it's an insured, government insured loan. And so the rates are normally lower. It's got to be in the census tract of 20,000 or less, but there's a lot of places that have been grandfathered into that that are larger than 20,000. So Aaron will have a link available so you can look up a specific house and see if it's qualified and your specific income level to see if you qualify for it too. It's a great, great, great product if you can fit into that box.
I will also link a video that I made that was a quick walkthrough on how to find out areas that qualify for USDA as well.
Yeah.
So,
awesome.
Yeah, fantastic. Well, Brian, again, thanks for coming on every Friday-ish, you know.
It's been every Friday except for the first one.
Yeah, except for, well, and then, our 1 week off, but that was scheduled. So, sounds good, guys. Thanks for joining us whenever you could. We're all going to take off. We'll see you on next week's. We'll figure out what we're going to talk about.
Maybe house hacking. Yeah. We'll see.
Yeah, we'll see. Thanks, guys.
Great job, guys. Appreciate you.
Yeah, great job, everyone. And come by next time. Until next time. Again, quick reminder, Aaron Morrow, Brian LaFlame, local Seattle realtor here, greater Seattle area, King, Pierce, Snohomish County. Brian all over Washington State. So,
Brian LaFlame, Washingtonian.
Yeah, Washingtonian. See you till next time.